and call the meeting to order July 27th, 2021 for the HPAC committee here. And do I have confirmation of a quorum?
Yes, we have a quorum and the press has been notified of the meeting.
All right. So next up is the attendees introduction, and I don't really know how to do that besides say somebody jump in and hang on. I really don't know how to do that with, stay in order without people talking over each other. But I guess somebody. Go ahead.
If you want me to, I have most of the members. I can just give the names of the ones that, I have not checked off. And if they're, if they're present, then they can say, if that's okay with everybody.
Yeah.
Great.
Great. Yeah.
David Algood.
Here, present.
Bonnie Campbell. Waylon Isaac. And Bev's here. I've seen her. Winston's not. Let's see. Susan Reber will be, like I said, a little bit late. Becky Rohrig. Terrence Sullivan. Abraham Williams. Mike, are you filling in for Abraham's proxy if Abraham isn't here?
And Mike, you're muted right now.
Zach Worsham. And that is it. The rest of us present. So.
Okay.
And is there anyone that's on the committee that I may not have? I have Vicki Bowling. Okay.
Yes, hello.
All right. And let's see, the rest of them would be, I've got Mary. Actually, what about the weatherization folks? Is Brandon Taylor here on the call? Of course, we have Wendy and Curtis. Rebecca. That's fine. We're ready to go. Rob Jones is just coming on board. You can go ahead. I think we're ready.
All right. Okay. Hello, Rob. That sounds good. Then next up, do we have any public participation? Any issues? If not, then we'll skip on down to administrative items. Next up is a very important item here because this is my last, I guess, official meeting as chairman before we formed this committee here, a nominating committee to go forth and seek someone else to do this. And we'll be having a party at the Brock House. I'll be happy to turn that over to someone else. First, I have to nominate. We have to establish a nominating committee. So I'm looking for someone to chair that committee, and then they can pick their vice chair and secretary and whatnot. So do I have any volunteers to chair the nominating committee forth and search for office?
I'll volunteer, Dave Crair.
All right. And Dave, would you be willing to pick your officers there for the committee and just report that back to Carla? Or?
Sure, can do that.
All right. Okay. All right. So then the next meeting, as I understand it, the way we'll do this, since we, used to, we just walk outside, the nominating committee would walk outside, talk it over, and come back in and recommend a slate of officers, but we can't walk outside right now. It's a little different. I guess you'll be reporting back at the next meeting and coming up with recommendations for the slate of officers. So next up, I want to introduce, I guess, Logan Haynes, Acting Director of Kentucky Manufactured Housing Institute, HPAC representative for manufactured housing. And again, like I say, not only am I the blind leading the blind, but I've discovered maybe I need some glasses here, but I'm going to try to read his bio. The Vice President of the Kentucky Manufactured Housing Institute. Prior to his current position, he served as Director of Education and Industry. Haynes has a BA degree, Business Administration from Midway University, and has an extensive background in the home construction industry. Logan began his career in the home industry as a contractor in the Kentucky Lake area. He built many custom homes in the Jackson Purchase region. Sounds like I need Logan around my house. As Vice President of KMHI, Haynes is responsible for the governmental affairs, zoning and land use, continuing education, and implementing the goals and objectives of the association. Haynes has been instrumental in developing the education for local municipalities regarding the updates and improvements of manufactured housing. With his close work with Department of Housing, Buildings, and Construction, Haynes wrote a book explaining Kentucky's regulations and statutes regarding manufactured homes. He currently teaches the continuing education for certified installers. In the fall of 2020, Haynes was awarded the Jim Moore in Communication
is now joining.
That award was awarded to him for his work in communications during the COVID-19 pandemic, and that has been a challenge. So welcome, Mr. Logan Haynes, and that's a very impressive bio there. So
thank you very much. Thanks for having me.
Yeah, so next up, I guess we have the consideration for the approval of minutes held during the meeting held April 27th, 2021. So I need someone to approve the minutes. Unless there's any questions regarding that, I guess we need a motion to approve the minutes for the meeting for 27th. Do I have a motion?
David Allgood, I'll make a motion.
Do we have a second?
Sorry.
Not sure who made the second, but we do have a second. So we have a motion and a second. Unless there was any discussion.
I need to know who made the second for the minutes.
Phyllis Parker.
Oh, thank you, Phyllis.
All right. Motion made, second. Any discussion? If not, all in favor say aye.
Aye. Aye.
Any opposed? Minutes approved as made. Next up, we have the resolution adopting the amended and restated HPAC charter as of July 21st, 2021. So we need consideration of recommendation of resolution number 1. So we need, I guess, a motion to accept that. Or
Dave Crair, I move that we accept the consideration of the revised and amended and restated Housing Policy Advisory Committee, which includes the information for the Weatherization Policy Advisory Committee as well.
Very well stated, Dave. Do we have a second?
This is Jason Dunn. I'll second.
We have a motion and a second. Any discussion?
What are the duties for that? Do we need to give formal review of something every year, or just respond to things?
Kelly Reynolds shared a little bit about this either at the last meeting or the one before. So Kelly, why don't you remind us what this entails?
Sure. This is This is a requirement of our Department of Energy grant that we received to fund weatherization activities, that we have a policy advisory committee. It's been running separately from the Housing Policy Advisory Committee for a number of years. And as Wendy and I discussed it, we really decided it might be better to kind of merge it together with the Housing Policy Advisory Committee. But predominantly what you're looking at is we just talk about program policies and ideas, brainstorming, issues that we're working on, but a lot, it's just looking at our state plan. I go over kind of the changes in our state plan with the Department of Energy and what we're submitting. But like today, I will give some updates on some just different things that we're working on, just to keep you in the know as a Housing Policy Advisory Committee, and then to get any feedback that you might have on partners that we could include when we're working on some new initiatives, or just things that, like, ideas to think about as housing experts.
Okay, thank you.
Any more discussion? If not, we have a motion and a second to adopt the amended and restated HPAC committee charter. So I guess we need to put that to a vote. So all in favor of accepting and adopting that restated charter, vote by saying aye.
Aye.
Aye. Aye.
Any opposed? Hearing none, ayes have it. So moving forward then, next up would be the mission moment. So who would be doing our mission moment today?
Says Dave Crair, so that'll be me.
All right.
Mission moment's something we've been doing for several years now, and it's kind of a taking time out to talk about things that remind us of our mission, affordable housing in particular. And every once in a while, there's some event or some phrase or something happening that kind of brings that into focus a little bit better, and it's kind of an affirmation of what we do. So I don't have any slides today or anything to show like that, but I just want to tell you a little bit of an experience I had earlier this summer. So we've been around for 40 years in Lewis County building new homes, and we have built about 367, about exactly 367 new homes over the years. And as executive director since 1985, I was present at all the closings when those houses were completed and the families were able to buy their home, get the keys, and move in. And we've had a local attorney that worked with us on those closings for years. And then he retired, and a couple years ago, an attorney from a nearby county came here to our office to do the loan closings. And this summer, after she had closed about her sixth one with us, she said afterwards, she says, you know, I've been in this business a long time and I've closed a lot of loans, but every time I come here, the people that are getting their new homes and the loan that I'm closing, they're so happy and excited. She says, I never see that anywhere else. And I thought, well, duh.
Yeah.
These people didn't think this was ever going to happen.
Yeah.
You know, and we realized that, you know, we've worked with these folks for sometimes as long as a year or two, trying to get them approved and get them in a condition where they can afford a house. And we bring in help from Kentucky Housing Corporation, who administers state and federal funding programs that make it affordable. USDA Rural Development. It comes with a lot of paperwork and a lot of extra work, but it does make it happen that people that didn't think they could ever possibly own a decent home or even live in a decent home because they couldn't afford it. They couldn't even afford to pay insurance or property taxes. Their income is limited and their opportunities are limited, and they didn't think it would ever happen. And yeah, every time they come to close one here and the house is finished, they've looked at it, and they're so excited. They got their pickup truck loaded with part of their furniture, and the rest of the family has it loaded with the rest, and they're ready to make a caravan to their new house and move in. Of course, they're excited and happy. And it just made me realize that these folks wouldn't have those opportunities without all these groups coming together, all these sources of funding, all this hard work. to make it happen. It's much different in the banking industry, where you have to qualify and have enough money to pay for it, and that's about it. So that's my mission moment. It's always an aha moment where I say, oh yeah, no kidding. This is why we do what we do.
Well, and Dave, I'll say, we built some homes before, and I've always been of the opinion that although home ownership is not for everyone, and there's circumstances where they're better off renting, home ownership is a great step toward getting out of poverty. There's a lot of keys to trying to get out of poverty, but now that's a major step in the right direction for those who are ready and committed for home ownership. So that's an awesome thing to see those folks get their own place, and who wouldn't be excited about it? That's something to be excited about.
And the other thing is too, in recent years, we've been building homes for families that grew up in one of our homes. Their mom and dad got a house through us 30 years ago, and now they're starting their own families, and they come back and they know the importance of having a decent place to live and how that affects the family. And they come for our help again to help them get started out on the right foot.
Daryl Overstreet.
It's a gift that keeps on giving.
Yeah, that's quite a testimony to the wonderful work that you're doing in the community up there. I mean, that's a lot of houses y'all have done over the years. And like I say, that really gets people a leg up, headed in the right direction. So that's wonderful. Great news. Anybody else have any more comments about all the good things Dave and his crew are doing? If not, next up we have an overview of Affordable Housing Trust Fund Committee meeting. So somebody want to jump in with that?
That's me, Craig. So you all meet every quarter. The Affordable Housing Trust Fund Advisory Committee meets every 6 months. So twice a year they meet on the same day you all do. They met this morning, and I thought I would share with you all, as I often do, just some of the highlights from their meeting. I always share the kind of a financial report with that committee, basically kind of where things are with the trust fund. So I'll go through a couple of tables that, because I'm a housing program policy geek, I love this stuff. You all feel free to ask questions, but let me share with you what you're looking at on this table right here. And Craig, forgive me, we'll get you this PowerPoint so that after the fact, it'll make sense to you, hopefully. So the last, the end of this quarter, so ending June 30th, we had a cash balance in our HTF bank account of almost $14.7 million. We have outstanding commitments to a variety of project types, and I'll talk about those in just a little bit, of $14.9 million. What that means when you look at the bottom line is that we have a negative balance, if you will, of almost $300,000. But that is not a bad thing. We view that as a good thing. This is a byproduct of us beginning to forward commit funds on the presumption of what we will be receiving into the trust fund. So we don't have a negative balance in our bank account. We have $14.7 million almost in our bank account. What we are doing is we know that some of our, particularly our multifamily projects, often take a long time to come into fruition. And we don't want to have dollars just sit waiting to be used. We'd rather take a very slight measured risk at overcommitting, or not over, forward committing. Daryl, I'm going to mute you because we're getting a bunch of echo.
Daryl Overstreet.
Is now exiting.
So we see this as a good sign, not as something to be worried about. I hope you all see it that way too. Another bit of good news is that when you look at the amount of transfers into our trust fund account from it comes from finance, but through all of the clerk fees across all the counties, when you look, these are fiscal years, keep that in mind, not calendar years. So the fourth quarter of the last fiscal year, we got $20, you all. That was a worrisome quarter for us, and that was a byproduct of court offices, county offices being closed, fees not being collected, all that kind of stuff. But you can see when you look at the last fiscal year that we just ended, fiscal year 21, we are seeing a nice bounce back and have almost caught up on what we didn't see that quarter in receipts. We're very glad to see that. And it's hard to say, will this elevated trend of it, usually it's about 1.2 million a quarter. It's now 1.5 for the last several quarters. Is that catch up? Is that kind of a heated, market for home sales? Or, will it continue or will it go back down? We just don't know. Time will tell. But we see this as a good sign that it looks like we've just about caught up on our receipts into the account. So every year at KHC, we do what's called an allocation plan, where we take all of our funding sources and project what we think we will use those sources for. Many of our sources, we get it for one use, that's all you can use it for, there's no discretion. AHTF is one of the few sources that is discretionary and can be used across a couple kinds of project types. So we do an allocation plan every year that we present to our board, and that lays out a rough plan. It never comes true as planned, but it is a kind of a rough roadmap of how we think we will allocate funds. So you all would probably be most interested in the orange or peach colored column, the second half where it says proposed uses. So for AHTF in this fiscal year that we're in now, our plan is $1.5 million for single family homeowner production, $1.5 million for AHTF home repair. That's repairs on existing owners' homes, folks who already own their home and they need a roof, maybe a new furnace, foundation fixed, what have you. And then $3.8 million for multifamily rental production. And that might be small scale rental production, duplexes, fourplexes, or larger projects that might use tax credits and the like. So the total of all of that is about $6.8 million in AHTF. It is possible we will see more of that in receipts and carryover, but we just don't know. So that's roughly what we are planning to allocate. It's worth it for me to share with you one more table about this allocation plan, which is for single family projects, which it has been a concern of a number of ours, how much is getting toward single family development or rehab repair. It's important to also look at our HUD home funds and how much of that has been allocated to single family projects, whether it's single family development or the home repair. And so, so we have allocated about $4 million in our regular home funds. This doesn't include any special COVID-related home funds that we expect to be getting, because we just don't know the rules for that yet. But $4 million in home and $3 million in AHTF to single family type projects. So it's a total of $7 million, which is just a tiny bit more than last fiscal year and not way off from previous years. Again, it doesn't include the new dollars we're going to be getting because we just don't know what all of the allowable uses will be yet for those incoming dollars. I think that's the end of my. No, I had one more thing about AHTF, which was just to let you all know that we got a request from the membership of FAHI for us to basically continue and consider additional waivers on the limit of how much subsidy can go in a project. And we basically what we did is we continued the waiver amounts that we implemented in fiscal year 2020. And we have said that if a project needs more than that amount, we will consider those on a case-by-case basis. We're seeing construction costs and the cost of materials and labor. You guys are seeing it too, I'm sure. It's just going, it's really high. It's hard to know, is this a permanent new normal? Will it go back to something that would feel more rational? it's hard to know. So these are in place until the end of this calendar year. Potentially longer, we'll just reevaluate it at that point. Any questions? I think that concludes everything I wanted to share with you all from the AHTF committee meeting.
Wendy, this is Dave Crair, and I was just wondering, did the committee meeting, do they ever talk about increasing the amount of funding coming into the trust fund? Different possibilities there?
No, they're not really charged with that, or they haven't chosen to charge themselves with that, Dave. So no, I'm not saying that they wouldn't be interested in a conversation about that, but it hasn't come up.
Just with the increase in cost and everything, the money doesn't go very far, at least not as much as it used to. And there are things that we can do to try and get that increase. I didn't know what the committee's role in that might be.
Well, it would be worth talking with them. You know, they don't have a formal role on that, but they may be willing to consider playing a role.
Okay.
Yeah, the increased cost in construction is just wow out there. I mean, I'm hearing that the price of lumber's coming back down and that kind of thing, but you know, usually it never comes back down to exactly where it was. So who knows? My guess is that it would stay elevated at least above where it was before this COVID-19 plague came upon us. But anyway, yeah, I agree with Dave. The money don't go as far nowadays, and that's very important to a lot of people. So it would be good to find out if there was a way to get a little more money in, for sure.
Right, because otherwise we're getting fewer units for the same amount of money. Yeah, over time.
Yeah.
And that's all I had to report, Craig.
All right. Any more discussion about that or comments? If not, next up would be, I guess, an update on the weatherization program.
Perfect.
Who would want to? Who is that?
I think it's me, Craig. It's Kelly.
All right. I thought so.
I know. I'm the only one that seems to be super passionate about weatherization. Yeah. All right. So we've got some good things to report. The good things are our Department of Energy state plan was approved middle of June, which is the earliest since I've been doing this, we've ever gotten it approved. So I was really, really happy about that. Our project officer worked really hard to kind of get that approved before I went on a 10-day vacation. So that was even better. So that enabled us to get all of our contracts out to our subgrantees for our DOE funding, our Department of Energy funding, and our LIHEAP funding, which comes from the Cabinet for Health and Family Services before July 1st, which we've been able to do the past 2 years as well. So this is our third year doing that. That's not the history of the program. It's not really been like that. So we continue to meet that goal. It's a goal we set for ourselves as a program, because when they have money on July 1st, when their fiscal years start and the contract years start, they can just hit the ground running and not have any pauses on work. So that's super exciting. We also, another good thing that's happening in weatherization, we kind of set a goal for FY21 to really look at what could we do for a cooling program? What could we kind of put together? What are other states doing? So we've been setting in on some webinars nationally and looking at what other states do for cooling programs to kind of use some of our LIHEAP funding to fund. So in doing that, we came up with something. Our subgrantees weren't really excited about it, not as excited as I was. So that tells me that I need to go back to the drawing board. So we did. So what we're doing now is we formed a committee of weatherization directors amongst our subgrantees who are really passionate about providing a cooling program, but that it meets all the needs that they're seeing. So we do a kickoff meeting. I think it's the second week of August is our kickoff meeting for that committee to develop and put together what that cooling program for the state would be. So we as a team are really excited about that. We're excited that the weatherization directors wanted to participate in it because we know that tells us it's something that's needed, but also that we can provide something to them that they will want to deliver to Kentuckians. So that there will be more to come on that, and I'll keep you updated on what's being decided. But basically, that cooling program would be figuring out ways to get some AC to low-income families who can't afford it or can't afford to put it in. So that is exciting. So those are my good things. Now let me tell you about a couple concerns that I have. We talked with our Department of Energy project officer today, and our average cost per unit of dollars is higher than what we are allowed. We've known this to be the case for a couple of years. COVID, actually, this is one good thing that came out of COVID, was we were going to be over that average cost per unit in 2020, but because COVID happened, DOE allowed us to combine years. So we were able to use a higher average, and we've been combining grant years, so we didn't have to really meet that average cost per unit. But this year, we actually, for FY 22 have to meet the average cost per unit, and we are still high. So my team's going to have to strategize on what we can do just to keep subgrantees aware. We've given them some tools. Some of it has to do with wave funding flows, that they're not always able to use all the strategies that we would like for them to use. So it's kind of a domino effect that happens, but that is a concern. A second concern is we participated in a national wage study in March, our subgrantees, and I think we had 18 subgrantees that participated, and we have 19 subgrantees. Almost everyone participated in the wage study, but it was a survey. We chose kind of a simpler option for our subgrantees as a state, but there were 28 states that participated nationwide in the wage study, and we're just looking at what are the wages for our weatherization positions, and are we paying fair wages? I'm doing an analysis on all of that data right now. Our national partner, which is our NASCAS organization, which we are a member of, they are comparing Kentucky to other states. And I'm just going to be honest, we're pretty low when it comes to wages, comparatively speaking to other states, even compared to the states that surround us or our border states. It's a concern, and one of the concerns is our network continues to talk about that they're having trouble retaining staff and retaining crews, retaining people who are trained, and just I think that lower wages are an indicator of why it might be harder to retain staff and also harder to recruit staff. So I'm doing a lot of analysis on that. Started that last week, just looking at what our surveys have determined. One of the interesting facts that I just didn't anticipate, but NASCAS has set up on their website an ability to go in and look by county what the living wage is, and then you can look and see what our wages that we're paying. In some of our counties, we're not even paying a living wage. So I think that's a concern that's going to maybe turn into something bigger that we need to really address. So those are kind of my updates for you guys. Any questions?
Well, I'll just say it's no surprise that we're a little low on pay, and that's not limited to the weatherization department, but we struggle with Head Start and every other department, CSBG in general. Just we're low on the wage totem pole, and I'm wide open and would love to figure out a way to pay higher wages because our folks deserve it. I mean, they're not making enough money, and we all know it. I don't think that shocks anybody. We just got to figure out a way to pay them more. I'm good with it. If we can get more money, I'm good with paying them, giving them big raises, across the board. Everybody. Yeah, because it does hurt our retention, not just in weatherization, but in everything.
Yep, agreed. Valid points. Just Craig, for your information, NASCAS is going to be participating in the National Community Action Conference in the next, I think it's in September, but they're going to be doing a presentation on the wage surveys and what they found. So,
yeah, that would be good.
Hi, I'm Phyllis Parker. Is there a limit in the amount of money a person could receive in terms of LIHEAP and in weatherization funding, an individual?
That's a good question. There's not really a limit, but what we look at when it's concerned weatherization money. So weatherization is funded with Department of Energy money from the U.S. Department of Energy and with LIHEAP dollars that the Cabinet for Health and Family Services carves out for weatherization activities. So there's not necessarily a cap. However, for the Department of Energy money, we are prescribed an average cost per unit. So while they want you to do everything you can to do all the weatherization measures for one house, because you can only pretty much go in one time, that they still have this kind of ancillary cap. You can go over it, but in the end, all of your completion jobs have to average out to something that's not over their cap. We had that language in our LIHEAP state plan for a number of years, but during COVID, we changed that language to remove that average cost per unit because one reason is we had to be able to fund staff while they couldn't go out and do work when COVID was pretty hot and heavy in the spring of 2020. And so that was our way to be able to do that. DOE couldn't change their legislation, but there was nothing in LIHEAP legislation that kept us from that. So we've removed that average cost per unit. But if you were looking at just an average cost per unit, which is almost $7,700, if you applied that to DOE and applied that to LIHEAP, you can almost do $15,000 worth of work on a unit and still stay in that average cost per unit. Now, in weatherization, we don't say, oh, well, you're over the $15,000, you can't get the work. What happens is we do an energy audit, and you pretty much have to go in order of the audit. The audit puts the top priorities at the top of the list, and you work your way down, and it gets a certain score. So if it scores a 1.0, that's all the stuff that you federally by legislation can go in and fix. I know that's it's kind of convoluted, but that's kind of, you're basically looking at, even to stay in the average cost per unit, you could have about $15,000 to play with to do weatherization measures.
Okay.
All right. Any other questions? You're welcome.
Hey, Kelly, it's Jason. I have a question.
Yes, sir.
The average cost that's prescribed to us, how is that set and how is that determined? And is there any way to push back on the average cost that we're prescribed?
Let me answer the second part first. There is no way for us to push back. It is literally written in legislation that way.
Okay.
Congress wrote it in the law.
Okay.
Now,
so it's a formula.
What happens is that average cost per unit, it's calculated by a formula. So DOE cannot, because it's written in law, they can't do anything about what the cost is. What they were able to do, Jason, is in our grant terms. So when a DOE grant comes to you, it's a 3-year grant, even though it's a formula allocation every year. They have the option to extend that grant period, which they have done for the past 2 years. So our current grant is becoming 5 years, although we get a new formula allocation every year. What they allowed us to do is to combine years. So we've combined the last 2 years. So we basically have a 3-year grant, so to speak. It's very convoluted, and the numbers get even trickier to do. But they did that so we could use a higher average cost per unit.
Right.
Good question.
Can we redefine any of the variables in the formula? I'm sorry, I'm grasping at straws here.
No, that's prescribed as well. So the things what counts in the formula is everything that was program operations that wasn't health and safety. So if you paid for the measure, it's everything that paid for the measure, unless it was a health and safety measure. Health and safety measures don't count in the dollar amount, because we look at it as that is just, we have to do that to keep somebody safe.
Right.
It's not an extra. So it's kind of those extra measures that really just lower utility bills that get counted in the average cost per unit.
Okay.
Any other questions? All right. Thanks, everyone.
Okay, thank you, Kelly. So we're moving on now to KHC updates, American Rescue Plan Act funding. So we've got several items under that. So we're all ears.
Thanks, Craig. So I have presented to you all a little bit on this already, so I'm not going to go back and cover everything exhaustively, but I thought I would give you an update on where we are with these housing programs that have come to us through the COVID relief funding. Feel free to ask questions along the way. So I've got duplicate slides in here. Oops. So if you were with us at the last HPAC meeting, I think I shared a table kind of like this, which is the overview of the COVID relief funding coming to the state of Kentucky and thereby coming to KHC. Some of it directly to us, some of it first to the state and then over to us. So there was legislation passed at the end of December 2020, which feels like 10 years ago, that brought us our first tranche of emergency rental assistance. I will say in the fall, we got $15 million in rent assistance in fall of 2020 through a separate funding from the governor. And I'll talk about that, but this is kind of the newer, more formalized emergency rental assistance through Treasury. It's getting a lot of national press. Not much of it is positive, although I feel like we have a good story to tell in Kentucky, and I'll talk about it in a second. But we got to the Commonwealth, $264 million. Louisville and Lexington also got their own direct grants. You'll see those at the bottom of the table. There is a second tranche of that kind of funding, a little more flexible, a longer timeline, a slightly smaller dollar amount, but still like ridiculous relative to funding we get for other programs, just so much more than we would ever normally see. And not based on any specific need formula, really just kind of population based. And again, Louisville and Lexington will get direct grants of that ERA2 money, as we call it. There's also, later this year, we will be launching a homeowner assistance fund for homeowners that are behind on their mortgage. It'll be similar to the rent assistance, but it'll have different parameters. But that will mainly be very likely grants to help homeowners get caught up and get current on their loans so that they don't risk foreclosure. We are also slated to get almost $52 million in additional home funds on top of our regular program year, geared toward homelessness. I'll talk about that in slightly more detail. We've heard zilch about that. We've learned that there are some webinars coming, but we don't know when the money's coming. We don't know the regs for it. Very little from HUD on that. And then the last column are our emergency housing choice vouchers, EHVs as we are calling them. And KHC, because we run a Section 8 program ourselves, we've been allocated 257 vouchers, and we have begun taking referrals to get those leased up. So I'll talk just a little, and other housing authorities are also getting those vouchers. I'll share more information about that. So first, let me talk about the emergency rental assistance that's come from Treasury. We are running this as Healthy at Home eviction relief. Hopefully that sounds old hat to you all, because I've talked about it a lot with HPAC. If you know someone who needs help with rent, who lives anywhere but Jefferson or Fayette County, please get them to get an application in. We are not going to run out of money. I never get to say that in my career. I never get to say that. And it's a very broad range of eligibility. We are not turning very many people away. And the income is much roomier than most programs. It's just, and we have really tried to strip down the documentation required, and Treasury has offered us some flexibilities recently to make it easier, such that in many zip codes, we don't require any income documentation. I'm gonna let that sink in for a second. I'm not going to tell you what those zip codes are because we don't want to encourage fraud, but in many zip codes, we now have a lookup table in our system where we just won't even require income documentation based on some Treasury guidance. So we've tried to make it even easier than it was at first to apply and get through this program. So we launched February 15th. The money came to the state in mid-January. So we launched February 15th. Well, you know, in terms of housing programs, you all, that's like lightning speed, and it sure has felt that way. We were one of 6 states to start that early. We have paid out so far $32.6 million in rent and utility assistance. We mainly pay direct deposits straight to landlords or checks or deposits to utility companies. In rare cases, we pay a tenant directly if the landlord refuses to participate. But we do, in some cases, pay tenants directly. Most of that money has gone to rent assistance. A little over $4 million has gone to utilities. We have received 12,700 complete-ish applications. That is a very loose label. You know, they're complete means a lot of different things to a lot of different folks, but complete enough for us to take a look and start to pursue more information if it's needed. We have made almost 9,000 individual payments. So one tenant might have a rent payment and one or more utility payments. So we have more payments, of course, than we have households served. We've served, just since opening in February, a little over 6,200 households across the state in our 118 counties. The average amount of help is $5,200 so far. And we are getting somewhere between 350 and 500 new applications every week. When you look at our total grant, so it's $264 million that we're working with. We recently transferred $38.7 million to Louisville and Lexington. They are almost out of money. Louisville actually was out of money. Lexington is close to it. And so we transferred some of our grant and just subgranted it to each of them because we're not operating in their counties and we don't want them to run out. Again, we've paid out $32.6 million and we've had $2.8 million in admin costs. We share those costs with another state agency that is doing all of our tech stuff. And then we've added 80 staff. So that through a temp agency, that's expensive. So anyway, we have committed about $74 million, which is 28% of the grant in 4 or 5 months. So I'm really proud of that. The narrative you'll hear in the national media is nobody's moving fast enough, nobody's getting the money out fast enough. And we do still have a backlog. I don't want to try to evade that, but we are working through it and we're getting a lot faster with the streamlining that Treasury has allowed. But we still have $170 million to offer in assistance. So we do not expect to run out of money. We expect to have enough money to help everyone who's eligible and gets us a complete application. If you have someone who you know of that's having trouble, if you can get me the name, I can look it up, figure out what might be going wrong. We might even be able to get one of our staff to reach back out. That has happened. I don't want to get 100 names, but we're happy to deal with specific cases. We want folks to get this help. And just to remind you, they just have to be at 80% of area median income or below. No documentation required for a lot of zip codes. And we pay a lump sum of arrears and 3 months of future rent or utilities all at once to the landlord or to the utility, once in a while directly to the tenant if needed. So it's a significant amount. I mean, we've had landlords who've gotten $60,000, $70,000 when you add it all up. It can be a considerable amount of money. And again, we will cover up to 12 months of arrears and 3 months future payments for rent and utilities. We'll send this PowerPoint out to you all just so you again have the link to the flyer and the website and all that stuff. Okay, the next one, the Homeowner Assistance Fund. This is $85 million to help homeowners get caught up on their mortgage, taxes, homeowner association fees, anything like that. I think even insurance could be included if they're behind on insurance. We are awaiting, we want to submit a plan, but we're not allowed to do it until Treasury releases a bunch of guidance. So we're waiting on Treasury right now. The good news with homeowners is most of them are not in any imminent risk of foreclosure. I think the federal government has learned a lot of lessons from the last recession and put a bunch of things in place to basically halt foreclosures for the most part. And someone just doesn't get foreclosed upon as rapidly as they can get evicted. An eviction can happen really fast. So we don't feel like our hair is on fire with that program, but we are eager to get it launched. If you or a homeowner you know wants to get an update about when it opens, I have a link in here where people can sign up and they'll get on our email list so they can get notified as soon as it opens. And again, we'll send this to you in a PDF so that you'll have that link. We've had a lot of folks sign up for it. And banks, partners of ours, not just homeowners. Okay, and then we got a batch of new Section 8 vouchers. They're called emergency housing vouchers, and they are to house people who are experiencing homelessness or recently experienced homelessness. They might be housed right now, but they were recently homeless. And this requires a partnership between KHC and our identity as a public housing authority, as well as other public housing authorities, and KHC's homelessness team, which administers our continuum of care, which is like kind of the collaboration and system of homelessness providers, shelter and service providers across the state. We literally had to do an MOU between one department and another at KHC for this program because it requires this partnership. We are also working with other public housing authorities who got these emergency housing vouchers, and I'll show you the list. So Louisville and Lexington got significant allocations, and then a lot of housing authorities got a small allocation of 15 vouchers. We were allocated 257. Every housing authority in green is one with whom our homelessness team, our continuum of care, has to partner to do referrals for tenants who might be allocated those vouchers, issued those vouchers. This has just begun. July 1 was when we could start issuing vouchers and taking referrals and hopefully leasing up. We, for our 257, are focusing on folks who have some kind of temporary housing assistance. So they're housed, and maybe we can swap the voucher for the short-term assistance and keep them maybe even in the same unit. That's what we're aiming for with our vouchers. And then lastly, we have this unprecedented $52 million almost in home funds coming to us from HUD. We usually get about $12 to $13 million of home each year. That's on top of our regular program year. It is supposed to be geared toward housing the homeless, either with tenant-based rent assistance, or our aim would really be to use most of it to develop permanent housing that's just radically affordable, which means it has to be radically subsidized to house people who are homeless or were previously homeless. We can also fund services with it. We just need a ton of guidance from HUD, or we'll take any guidance. All we've received is a letter telling us how much is coming. That's it, nothing else. So, and we are concerned. Our Louisville HUD field office is understaffed and just takes a long time to get stuff processed. So we are worried that it'll be a long time before these funds come. Anyway, that's where we are with that. We just did I will say part of me is glad. We're just so busy with other stuff. I'm kind of glad that HUD's behind on getting us this. But I know that many of our partners would like to understand the details so they can figure out, are they interested in the funds? What would they propose to do with them? I can say that KHC, through a request for proposals, has engaged the Corporation for Supportive Housing, which is a national entity that supports, the creation of permanent supportive housing. We engaged them to help us think about, once the regs come out, what would make the most sense to do in different parts of Kentucky, right? What we do with this money in Northern Kentucky would be quite different from what we might do in Eastern Kentucky. So, and these deals are not going to underwrite financially like traditional multifamily projects. They're not going to have much rent revenue. They're probably going to need more subsidy than typically we would put in. So we need help thinking through what makes sense where. We also put in their scope of work that they would offer consulting to partners, so that if a partner was looking to use these funds to build something but needed help, that the Corporation for Supportive Housing, which is a national, really well-respected entity, could offer help in that area. Help pairing up nonprofits with developers, evaluating the financials, the long-term stability, all that kind of stuff. Because we don't know at KHC enough about these kinds of projects, because we frankly haven't funded that many like this in the past. And I think that's, believe it or not, and if you want details, I would make sure you're on our eGrams list, because that's where we will announce, applications opening, that homeowner assistance fund, anything like that. And with that, Craig, I will zip it. I'm happy to take questions from anybody, though.
All right. Any questions on all that barrel full of money there? That's a whole bunch of money, and don't sound like a whole lot of details yet to go along with it. But the eGrams will be coming out and all that stuff. But if you have any questions for Wendy, have at it.
I would just like to advocate for more. When you build into those proposals, build in for services and supports for persons with disabilities and mental health needs.
Well, one of the things, Phyllis, we actually have going for us is the home dollars. Usually you can never use those for services, but they say we will be able to fund services with them. They haven't given us any more detail than that, but that is an allowable use, and that's never happened before.
And there are some models coming out of NAMI, N-A-M-I, where they're doing some, building some supports in homeless areas. So we may want to look to NAMI and some of those groups as well. So when you start doing that, I'd be happy to kind of pull some resources together for you.
Thank you.
That would be great if you could share those even now.
Okay. They put together a PowerPoint. I just saw some last week, so I'll try to do that. There was a podcast last week that they were working on that they did from New York, so I'll try to do that.
Thanks.
All right. Any other questions for Wendy on that?
No, I'll just second Phyllis's comments about services. That's kind of been our dream, to be able to use funds to pay for services and not just bricks and mortar. So that'll be great.
Yeah, I think that makes for a more successful stay in the home if you have services built in like that.
Absolutely.
Yeah,
I think it also, go ahead.
I'm sorry. I have to echo what was just said about that services. You can have the brick and mortar, but if you don't have the individuals to assist you, then it really doesn't do you any good. But also it helps the affordable accessible housing, that our number one requested service that we have at the Center for Accessible Living, the largest metropolitan area, is accessible affordable housing. That's our number one call for services every year, in and out. And that's, there is not enough of those units in Kentucky for the citizens that need those, and the numbers only growing more. But it's true, you need a wraparound services to be able to really truly support someone in the community.
And I guess I come at it from the other end, that if we could find brick and mortar places that could build it and operate it, and we could provide the services, like, it might be a great way for this committee to brainstorm some ideas about how we might partner.
Mm-hmm.
Well, Bev, it sounds to me like this might be one of the things HPAC is interested in playing a role in helping us as we start to think about it, or when we engage the Corporation for Supportive Housing. It can't be a one size fits all. We realize that it's going to be based on what partner capacity there is here versus there, and the need, and it's going to probably look different in each spot.
Right. Definitely, yeah. Anything else on that? If not, I guess we're down to informational items and announcements. Does anybody have any items and announcements we need to go over today? I don't have any. Does anybody else have anything I need to bring before the committee here?
I guess I can talk a little bit about the low income household water and wastewater assistance program. I got to make sure I get the acronym right in my head all the time. And this was a new program, kind of a cousin of the LIHEAP program that pays for energy. It'll be the first time from the federal level we've had assistance dedicated to water and wastewater. The feds were kind of slow to get the plan guidance out. We've been waiting. We have everything pretty much set. We've been working on the benefit matrix of how that would work. I don't know if y'all know this, but Kentucky's water costs vary widely across the state. So we're trying to create a benefit matrix that will work for most people across the state. Our plan deadline is coming up soon. It's the 9th of August, I believe. We'll have a meeting with some stakeholders on Friday to go over this, and we'll put this out on social media to see what, as long as we can, to get some public input on the plan, but hopefully we'll get that out soon. It'll be kind of like what we did with the Healthy at Home Utility Relief Fund at the end of 2020, those last 6 weeks of 2020, try to help people with their water bills that we haven't been able to help with other funding sources. And I don't know if the existing rental and utility assistance fund, Wendy, that you were talking about, kind of helps pay for some of those water costs too. And we can maybe share between those programs, get that water assistance out. But for those who are coming in to apply for LIHEAP, while we have them there at the community action agencies, that'll be an opportunity to say, hey, we have this fund for water and wastewater too. So if they're coming to KHC for rental assistance, they can look at utilities. If they come to community action for home energy assistance, we can look at assistance for water. So we're excited to do it. We're looking at an October 1 start date for that. Lately, before today, I've told everybody fall, so I'm trying to narrow it down to a month. So I think we're closer. We'll have to file a regulation, all that fun stuff. But, we'll see, pending the comments we get from our public input and stakeholders, and of course the feds when we submit the plan. If all that goes well, we're looking at an October 1 start date for that. If that changes, I'll let everybody know in the future. And I also want to say it's great to see Bev Merrill here. I haven't seen you in very, very many years, Bev, so it's great to see you.
I need to call you about another Zoom meeting, so I'll call you sometime in the next few days. Anytime.
I will say, going back to what you were talking about there, the water prices have, they do vary tremendously. And Eastern Kentucky's got some challenges in that area, and the cost of water can be pretty significant around here. And I've said for a long time that, a lot of folks are struggling to pay the water bill, not just the electric bill.
Right.
But, the flip side to that too is, we keep offering more money, more money. But as the cost of everything goes up, and it is going up, as you've read in the newspapers, or those things still exist, but you've seen on the internet, TV or something, that, basically inflation is definitely here. There's some argument on whether or not it's transitory or whether or not it's going to settle down. But for the moment, the price of everything's going up. And I would say that a lot of working folks, a lot more working folks are needing help. And I guess where the cutoff line is on the low income is probably not satisfactory to me. I think if you're trying to raise a family, it takes a lot more money these days than maybe what a lot of folks think. And I think that low income mark maybe ought to be a little higher, but that's not that's another argument for another time. And somebody else sets those numbers, I know, but you don't have to be right down to broke to be needing help. It's hard to raise a family with today's rising prices,
Right. We do have an elevated income level right now in the LIHEAP program. We're going to mirror that in the low-income water program too. So usually it's a little bit, I think a little bit higher than 100%, 125 maybe, and we're at 150 right now. That's as high as we can go under the LIHEAP program. So we're trying to keep things aligned as much as possible to make sure, people know what they're eligible for. But I agree. I'd raise it beyond that if I could.
Yeah, I know.
Right.
Yeah, that's like I say, I wasn't expecting to get anything like that done today here at 2:45.
Yeah.
But nonetheless, it is that's in my opinion, your low income well above what some of the targets are, in my opinion.
Right.
But a lot of money out there. A lot of money. I hope it'll be used wisely, and I hope it'll be used efficiently and that kind of thing. So. Anything else we've got on announcement for informational items? If not, we're down to suggestions for agenda topics for the October 26, 21 meeting. And there's been some discussion about whether or not we want to meet in person. And you'll see on the agenda there, meet in person 2 times a year and virtual 2 times a year. I would love to get back to in-person meeting myself because that's the only way I can stay on track and not pulled over on the side of the road, trying to do a meeting. It forces me to get in a participation mode and not try to multitask and show up. And I think everybody's more attentive. I think it's just so much easier to present, the information and that kind of thing and have an audience that's ready to receive that information. So, but I do realize that, apparently we're, seeing places back in the red and, maybe the 128th strain of the COVID virus. So I don't know what I guess this is open for discussion on what we're going to do going forward. Like I say, some people have talked about
is now exiting.
But does anybody got any thoughts there that they want to talk about as far as, will the next meeting be in person? Will the next meeting be in a virtual one again? Or what's the plan here?
What about hoping for the best and intending to meet in person? But of course, we could always go to Zoom if we had to.
Yeah, I think that's a great idea. Yeah, I think that's probably hope for the best, plan for the worst kind of thing, and let's put a target out there, maybe meeting in person in October, and then if that don't work out, Carl will be sending something out saying, hey, the numbers are too high, or CDC's got us all locked down in the basement or whatever, So I think that's where we should go, is just, myself, is to try to plan on an October in-person meeting and then see how it goes between now and then.
Do we want to talk about the other thing on that agenda, in person twice a year, virtual twice a year?
Yeah, and I mentioned that's what some people had discussed. So, does that sound like something we want to do, or are we wanting to try to make that just part of the game plan to do 2 and 2, or we want to try to just get an in-person in, and that's, or maybe you have an in-person but do virtual option on the other 2. But those that want to come, if we are cleared to go, those that want to show up in person can do that, and then or we can have others join the Zoom or whatever. Carla's the one that does most of the work for this thing, so I yield the floor to her. Well, I tell you what, since nobody really, there's not really a way that we're going to probably vote on it and get it done today. Why don't everybody just, and I hate to bombard Carla, but seriously, why don't everybody just go ahead and email her your thoughts or what you'd like to do and that kind of thing, because we can't have a meeting with other people. So if I sit here and say, yeah, we're going to do 2 and 2, and then nobody shows up for the one that's live, then that wouldn't do any good. So I think probably, maybe Carla could send out a Survey Monkey or something, who knows on what we do next.
I think that's a good idea. Why don't we, instead of you all emailing Carla, because poor Carla's email gets pretty full, we'll do a survey, Craig, and ask people, would they rather all virtual, all in person, or half and half, provided COVID allows for it.
Well, that sounds good to me. And then just open the door there at Frankfurt and let me go in and say it though for the next one, even if okay, just give me a meeting space up there in Frankfurt and I'll be there, and the rest of y'all can be virtual. But that sounds good. Just send out a survey, and then whatever the will and pleasure of the people as compared to what is allowed by the powers that be and the tyranny above, whatever, we'll do whatever. But just let us know and send that survey out, and everybody can put their 2 cents in, okay? So having said that, I guess we're ready to move forward with adjournment if all hearts and minds are clear. If I can get a motion to adjourn, we'll shut this thing down.
I make a motion.
Okay, fella.
Second.
Okay. All right, then I guess we're done. So y'all have a good evening.